I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending November the 20th, where this week was pretty much typical of what we've been seeing here as of late for the last several months. Just a very volatile futures market, either opening the market sharply lower and then coming back sharply higher later in the week, which is we saw this week, or sometimes it opens a week sharply higher then ends up sharply lower. But ultimately we continue to lose ground on a cash basis, both on fat cattle and on feeder cattle, and that's kind of the way it was this week. Your live cattle futures for December ended the week on Friday down 20 cents at 129.70, which was just about $1 lower for the week, which is really not that bad, but just all that volatility doesn't lend any support to the market. Feeder cattle, November went off the board, so now we went to January, which we lost considerable ground there going to January, and it gives the board a lot of room to really be more volatile between now and January, the end of January, because it doesn't have to meet up together until then. So there's no telling how wild it could get on that board, up and down, mostly down probably between now and the end of January. But on Friday, your January board was up $1.20 to end the week at 163.65, which is a lot lower than what we've been working with. And that was just down about 90 cents for the week. Your CME feeder cattle index end of the week at 174.39. Cattle Market Central's real-time index is at 170.12. However, if you look at that real-time index on Cattle Market Central, which you need to go on and monitor that to give you an idea of what's coming up with CME index, because it's at least a whole day faster because it's real time and you get to see that index come together as it happens. But the bleeding did stop on that RTI late in the week on Friday and Saturday sales. So we expect a little bit of support on early in the week on Monday coming in, and perhaps we will see some gains on that CME index, because CME index did last week or this past week post a low for the year, along with your select cutout values and your 90% trimmings, and we're seeing a lot of things post lows for the year. Your fat cattle for the week was $4 to $5 lower, both live and dressed pretty much. Your live sales, which were not really that well tested, ranged from 123 to 126, and once again for a second week in a row we didn't really see a established market in the Southern Plains, because not enough negotiated sales really to get that settled. Most of your sales were on a dress basis at 195 all over the Northern Plains, but we are hoping to see something come out of this meeting that I talked about in the last time we visited, is that the Commodity Futures Trading Commission is going to have a meeting on Tuesday to really look into this volatility and what the high frequency trade has done to the volatility in the cattle futures pit, which we don't have a pit anymore, but in that arena. But and then that's probably part of the problem, is because we don't have a pit anymore, and it's all on the computer and all automated. At that high frequency trade, you know, it's just come in and it's automated, and they can set that up where it can see the trades come in and then put in an order to take advantage of those trades. So whenever the board wants to or really needs to make a 40-50% correction or move one direction or the other, all those trades are putting in as those orders come in just make that thing snowball whichever way it's going. Instead of going 50 cents one way, it goes $3 one way, and then the next day, instead of going $1, it goes $4.50. And now that we've got these big daily limit moves, it's just really taking a toll on the market, and people have lost any confidence in it. And you know it's bad. You're in a sale barn, and most of the time people are huddled around the board, especially late in the day, to see how it's going to close. But anymore, you know, people are just like, you know, who cares? You know, it's a bad deal really, and now that the banks are wanting everybody to hedge everything all the way to the eyeballs, because they know this market's in a downtrend, it's just putting so much pressure on the board, and we don't know for sure if we get rid of that high frequency trade, will we lose all our speculators, which would be a bad thing, because then we might not have anybody on the long side of the market and just everybody hedging and pushing down on it, which could break it even worse. We're just not sure what would happen. You know, something's got to be done. Maybe we need to raise the margin requirement to trade in that thing, so that we don't have so many people just playing it just like they would in Las Vegas and just rolling the dice. If it costs more to play, maybe not so many of them would get in and play around. But like I said, at the same time, you still got to have your speculators. So it's kind of a bad deal. But you look at your cash market on feeder cattle. For most of your sales all around the country, $5 to $10 lower, a little bit sharper on the calves. We did see some recovery late in the week, but still, as a whole, the whole week was $5 to $10 lower. Your southeastern calf markets were more than that. They were $5 to $15, maybe $20 lower, because we've gotten past the middle of November, where everybody really wants to turn out on that leased wheat. So we don't have as much demand for those wheat grazing cattle. On Friday, your cattle on feed report come out. It was very, very close to what expectations were, so we don't expect any of the volatility that's going to happen this week to be blamed on the cattle on feed report. But your on feed numbers come out at 102, and that was exactly what was expected. Your placements were 96, which was exactly what was expected. And your marketings come in at 97. The average of analysts' guess was 96, but even that 97 was the lowest ever October marketings posted since the series began in 1996. Look at Cattle Market Central on some real-time load lock quotes there. In South Coffeyville, Oklahoma on Friday, they had a load of mixed colored steers, weighed 791 at 170.75, and that's pretty much the market. In Knoxville, Iowa, they had a short load, nearly a load of 621-pound calves. Steer calves bring 193. Check out DV Auction on this Monday here. They are expecting a big run at Joplin Regional Stockyards, 8,000 head and over 6,000 yearlings. And a lot of yearlings showing up. Where they've been, I don't know, but we've had a lot of yearlings show up in the Southern Plains the last week or so. But that should support the market a little bit, having that many yearlings, and all them Southern Plains feedlots still want to feed a yearling rather than a calf. But that's your markets for this week. From a home office here in Maysville, Missouri. We'll talk to you on Wednesday.